This is a show where my dad and I talk about work and how to enjoy it, and we also provide a weekly housing market update and provide a quick answer to common mortgage questions. Please enjoy the Dirty Troughs Podcast from Cleveland Street Mortgage. Alright, thanks for watching the Dirty Troughs Podcast. This week's episode, we're going to be talking about money and if it's a good motivation for work. But we are going to start with our weekly housing market update. So I'll turn that over to you, Dad. What do we have going on in the housing market this week? Anything, any major changes, anything?
Probably this week could be more impactful on the mortgage rate side than maybe, there's not anything really drastic happening in the housing market. No big changes, from the last time we were here. It's still adjusting. Properties are sitting longer. There's more time to consider offers. If you're a buyer, it's harder to be a seller right now. But that said, interest rates.
So if you're a buyer, it's harder to be a seller just because of all the costs involved, or what do you mean there?
Sorry, if it's harder to be a seller right now, it's as a buyer you have more time to make a considered offer than have to offer on the spot. But really kind of continuing the theme of last time of, there's a rebalancing going on between buyers and sellers. Wouldn't call it a crash. Certainly appreciations have slowed down. Price reductions are common. Property sitting for 2 weeks, 3 weeks is common.
Yeah.
And so it's a good time to keep an eye on the market if you've been shopping and kind of tapped out. For another reason, which interest rates, I think we finally had a win for a week last week. We finally had a winning week, which is not necessarily to say that rates went down significantly, but the market held serve finally. And I think that's indicative of, we have a busy week coming up with the Fed, but there's a lot of noise out there right now saying that maybe the Fed's thinking they've finally done enough, or at least they can see the end. Gotcha. And maybe we'll start to see inflation come down, and that will tend to relieve the rates. And so
some stabilizing for now in terms of rates.
Yeah.
Got it.
And maybe some reductions in the near future.
Got it.
In the future. Let's not say the near future.
Sure.
Yeah.
Okay. Got it. Well, we'll shift over to the mortgage question of the week, which this week part of this is me learning, and I am still unsure, a little unclear about how and when someone's job change affects their ability to qualify. Some of it, obviously, there's not firm rules on, and it just depends on how it's underwritten. But there is some extent of there are general principles of if you have a job change to this kind of job or from this kind of place within this time, then you need this many years. Or so I know that is pretty general, but that's kind of my level of understanding right now. I came out of my wife and I, Holly and I, recently bought a house, and we came out of college. So that was a factor right out of college into related careers that we had a degree in. So that kind of income was able to qualify, but I'm not sure if someone has been working a salary position for 2 years and they move to a new company and they have a better salary and it's still a salary, does that qualify? So what are the principles there?
Yeah, so I think you touched on all the right things. In general, it's almost always preferable not to change. However, there are some changes that are completely fine. So, for example, if you are an engineer that works for Boeing and you decide to go work for a different aerospace company, or even a completely non-aerospace company, but you're an engineer, you're performing similar tasks, and you go from salary to salary, no problem at all. Right, you can. Now, the longer the gap between jobs, that could create a problem. If your gap between the one job and the other job is, let's say, 6 months or more, then there's going to need to be an explanation. But even then, generally, as long as you're going from a fixed salary position to a fixed, or even if you're going from an hourly into a fixed salary position, that's really what's key. You're going into a fixed salary position, so it's
in the same line of work.
Generally, but it doesn't necessarily, and that can be very broadly construed. Yeah. Line of work can be very broadly construed. And so if you're an office manager for a real estate company and you become office manager for the septic company, That's the same line of work. You're an
Yeah.
office manager. And if you're salaried in one, you go to a salary to another, you're fine. Where you run into problems is, even in a salaried situation, let's say you're salaried and you go to salary, let's say you work for a food distribution company and your salary plus bonus, you go to work for the major competitor of that food distribution company, same line of work, same job, salary plus bonus. That could be a problem if you need the bonus to qualify, because the bonus is the variable component. And that's the thing that underwriting now has some questions to answer as to, okay, you used to earn this bonus over here, and we see what the terms of your employment are, but you don't have a history of earning the bonus here. You earned it here.
Yeah.
And so that's where you could run into trouble. You certainly can run into trouble if you go from salary to hourly, or even hourly to hourly. Let's say you work at Fred Meyer's and then you go to work for Safeway, and you've been working at Fred Meyer's and you work at $22 an hour, but by nature most of those jobs are hourly and variable. And maybe you've been working 40 hours a week and maybe even overtime, but now you move to a new job. There's no guaranteed number of hours.
And does that matter if you were at Fred Meyer for a year or 2 years and then you end up at that new place?
It does matter. They will have an easier time if you go from Fred Meyer's to Safeway. You'll still have a harder time using bonus income or overtime income or those sorts of things because you don't have the pattern at the new place. And so you'll still have a hard time. But if you have 2 years history at Fred Meyer's and then you go to Safeway, you'll probably be able to use your base salary at some historical work average, as long as there's some indication of new work.
So if you make that move, because what I hear a lot of times, or see asked a lot of times, is the 2-year rule, which I would guess is more of just kind of you're very safe if you have that 2 years kind of thing, but doesn't mean you can't qualify with that income before. So what if you have been at Fred Meyer's, who knows, a year, then you shift over to Safeway, you've been there a year, and then you apply for a loan. How's that income going to be counted?
Really, again, your base pay, hourly pay, as long as you have a history. Basically, if you move from Fred Meyer to Safeway, and then ever since you started Safeway, your hours have gone down a little bit that whole time. You've gradually gone from, Freddy's, you were working 40 hours a week, plus some overtime. At Safeway, you started at 40, but for the last 2 months now you've been at 30. You see that decline, that could be a problem. But generally, if you're working that same pattern and you can support that pattern, then you're probably going to be fine. Where you also run into trouble is if you go from let's say you go from a salary position to self-employed. That's a real challenge. There are some very rare exceptions where if you're in a position where you're moving into self-employment, doing the exact same thing, serving the exact same companies, and maybe have some contracts to back that up, then maybe you'll get an underwriter to buy that income. But generally, if you move from employed by somebody else to self-employed, you're going to need probably 2 years, and that's 2 tax returns. You might be able to get away with 1, but you're probably going to need to count on 2 tax returns in order to qualify. Or if you move from salary to hourly, you move from salary to hourly, and that can be a challenge as well. You had this salary, and if you move into an hourly position where the employer will vouch that you are guaranteed a certain minimum of hours a week, then they'll probably give you that as well.
It seems like that I've still got a lot of questions. There's a lot of nuances. Can't get into everything there. But I do want to say, before getting into mortgage specifically, I didn't even, we might be making an assumption here, even talking about qualifying income, I didn't have a sense of what that meant, why that mattered. So can you explain, I could take a stab at it, but you're going to be a little more articulate, because still even that, figuring out all the details, but can you explain what is qualifying income? Why does it matter? And if all of your income qualifies, you're not going to use all of your income for your mortgage payment. So how does that factor in?
Right. So one of the primary metrics that underwriters will look at in determining whether they should grant you the loan or not is your capacity to handle that debt that you're asking them to authorize you to take on. And the way they measure that is with metrics. And they use these metrics and they use them over millions and millions of transactions, and they measure default risk. And they come up with these metrics that say, okay, if you have shown a history of responsible credit use and you're asking to take on new credit, and that credit combined with any other monthly debts you have puts your minimum monthly obligations at 50% of your gross income, that's what's called debt to income ratio. And that's one of the primary metrics that they're going to evaluate. They're going to evaluate your credit. They're going to evaluate the property. They're going to evaluate your assets, whether you have enough funds to put into the deal and where the funds came from. But really, the one of the biggest things that they're going to look at is your capacity to handle that. And that capacity is measured in terms of your historical demonstrated ability to handle credit and your raw debt to income ratio. And that qualifying income is what is the denominator in that. They'll take your total debt divided by your qualifying income or your gross monthly income, and that percentage for Fannie and Freddie, most deals needs to be 50% or less. And so what that qualified, it's not that they're saying we need enough qualified income to cover the mortgage payment, because they know you need to eat and you need to cover other expenses as well.
50%.
So 50% is the max typically they'll allow you to go to.
Yeah, cool. That makes sense. All right, well, we're going to shift gears a little bit to our conversation about work, which this week is talking about money, and specifically dealing with the dilemma of is money a good motivation for work? I think no matter what your worldview is, no matter what approach you take to life, you've probably felt that dilemma to some extent where you know that money doesn't ultimately make you happy, but at the same time it does make you happy. And so how do you reconcile those two different realities, that there's no ultimate happiness in it, but it does make you happy and you do want money, and it enables you to live an enjoyable lifestyle? And so how do you reconcile those, and is it a good motivation to work, and where does it fit in your mindset and thinking about work? So that's what we're going to tackle. Dad, you want to take that away a little bit?
Yeah, so I think I want to borrow a little bit from the rules of logic to dig a little deeper into the question. There's something called a causal fallacy in logic, and that's when you assume that a necessary condition is also a sufficient condition to support an argument. So you have a difference between necessary and sufficient conditions. And one example of this fallacy is I have gas in my car, therefore it should be running. Having gas in your car is a necessary condition for your car running, but it's not a sufficient condition.
It's not the only one.
For your car to run. There could be lots of things that could be wrong with it where you've met a necessary condition, but you don't have sufficient conditions. And I think thinking of the question of, is money a good motivator for work? Is it a good motivator for our work ethic? Helps us avoid two ditches, I think, that are common in answering this question. One is that money is nothing or even a bad thing. I think that's one ditch that people often fall into is, money's bad, money's evil,
it should not factor in at all.
It should not factor in at all. And the other is money is everything, or a sufficient end for meaningful work. And I think that we can see that the one ditch is clearly not right. Money isn't in and of itself evil. It's not a bad thing. God created us to need money. We need money to function, and certainly that's borne out in the scriptures. He's charged us to work to get money. In 2 Thessalonians 3, Paul says, "But we command you, brethren, in the name of our Lord Jesus Christ, that you withdraw from every brother who walks disorderly, and not according to the tradition that he received from us. For you yourselves know you ought to follow us. For we were not disorderly among you," and this is how he's defining it, "nor did we eat anyone's bread free of charge, but we worked with labor and toil night and day, that we might not be a burden to any of you." And so you see here that Paul elevates money, right? He had to work in order to have money, in order to provide for himself. We also see it in Proverbs. It says, Proverbs 14:23 says, "In all labor there is profit. But idle chatter leads only to poverty. And the profit motive is often demonized, right? It's often demonized. People think that this profit motive somehow taints or defiles whatever the activity is. And really profit motive ought to be lionized.
Yeah, I think you get, I mean, even the phrase where, especially you get it in business, where it's business people need to give back. Someone mentioned that recently in a class I had, and just the idea that you need to give back suggests that you've been taking, and that's a bad thing, and you need to make up on it. Which, there's a lot in that, but just that phrasing suggests the idea that that you making a profit is in a sense taking from someone, and you need to give back to that. And I think it does have that stigma.
Yeah, that's interesting that you bring that up, because that same phrase is always kind of bothered me as well. Partly because as Christians, if we are involved in any sort of acts of charity, we're supposed to not let our left hand know what our right hand's doing. Mm-hmm. We don't do those good works to be seen, and so part of me, is offended by that, or doesn't really like that. Yeah. But the other thing too is it begs the question, to who? Yeah. Mm-hmm. You give back, or it's always to the community, right? Yeah. We're giving back
to our community.
But it's not the community that gave you the job. It's God. It's God who gives you the skills, who gives you the ability to work, and then you go work and you serve the community.
Yeah, and you didn't take anything from them in the first place.
Yeah, you're actually giving to them, and that's the nature of our work, right? Yeah. We're created so that we can serve the community. So in a sense, the community ought to be giving back to us. Yeah. And it kind of feels weird to say that, and I don't really mean that literally, but it really is.
But if there is an exchange going on, it's got to be that direction.
Yeah, it's got to be in the other direction. And if we're doing a good job, the community, and then you do see that sometimes. Yeah. Sometimes you see communities that honor businesses that really have contributed to their communities, and a lot of times that has to do with stuff not related to their primary purpose. Yeah. And we ought to really see more of that, where communities say, thank you for running an amazing car dealership business, because you've really made our community a wonderful place by running a good business, providing us resources that we need. So anyway, that's a little bit of a side. But the profit motive, we ought to lionize the profit motive. God again created the profit motive. It says in Proverbs 16:26, it says, the person who labors for himself, for his hungry mouth drives him on. And there's hints of Adam Smith in there, right? Adam Smith picked up that idea of the invisible hand, that his idea when he wrote The Wealth of Nations, where he observed that these communities, these nations that prosper, don't prosper because there's this totalitarian state overseeing and manipulating everything, whether it be a socialism or communism, but it's the invisible hand of private motive that drives everyone to do the best job they can so that they can get the resources they need to feed themselves. And so I think the profit motive, all that to say that that ditch is a ditch. Money is not a bad thing, but it's not a sufficient thing. And that's where I think money is not a sufficient motive. And I would argue that because we start with Genesis chapter 1, where God tells us, he says, let us make man in our image according to our likeness. Let them have dominion over the fish of the sea, the birds of the air, the cattle over the cattle, all the earth, and every creeping thing that creeps on the earth. So God created man in his own image. In the image of God he created them, male and female. Then he blessed them and said to them, be fruitful and multiply, fill the earth, subdue it, have dominion over the earth and the sea, over the birds of the air, over every living thing that moves over the earth. This is what we call the cultural mandate. God created us in his image, and he is a creator, and he created us to be creators. So I would say that money is a necessary condition, and therefore good. It's a good motive, but it's not a sufficient condition. We shouldn't look at our work and say all this is about is earning $1, and if that's all it does, maybe that's the best, highest motive that you need to provide for your family, and that's the best thing you can do to earn $1. Maybe there's other things you'd rather be doing, but that's the best thing you can do to earn sufficient income, and that's fine. But you should always see your work as you're participating in God's creative work. We are participating with him.
Yeah, they're definitely not exclusive motives. And I don't know if there's, I mean, in a sense there is a hierarchy of the motives where, that's I think the first and best motive comes from Genesis there, like you're talking about, of imitate God, who is the first creator, and let's go and create. Let's go and use what he's given us and worship him by imitating him. And creating is obviously a loose term here to describe anything that is fruitful, anything that brings about a good, fruitful result. But to the point of the hierarchy, if there is a hierarchy of those motives, then understanding that doesn't mean you need to be emotionally excited about what you're doing, right. But understanding that your work has value because it imitates and it works in the economy of God's creation, and is fruitful because it pleases him by producing something for someone else, is very high in the hierarchy. But that doesn't eliminate or exclude money, enjoying the good things that are part of creation for yourself, and for your family, and providing for your family and serving those around you. It certainly doesn't exclude that. I don't know if you need to break it down into a hierarchy, but both are certainly praised and valuable.
Yeah, no, I think it is useful and difficult, like you said, and I think the way maybe to think about that is, all of the things being equal, then I think you would put the creative value of a vocation above the monetary value, all of the things being equal. But if you had something like this where the creative value is way up here, but the monetary value is way up
one
here.
Job position,
one job position. The creative value is way up here, and you can't quantify these things. But thinking philosophically,
you can
right?
serve hundreds of people, and it's something you love doing, and you're talented at.
Yeah, and you're just creative value is way up here, but the monetary value is way up here. But in order to support your family, you need monetary to be here. Mm-hmm. Well, then you need monetary to be here, because if you don't provide for your family, you're worse than an unbeliever, the scripture says, right? So provision is an important part of that job that you have, but it is hard to rank. It's interesting that, ironically, in many ways, it was the church that was responsible for the diminishing the meaning and value of work. It was kind of the medieval church. The medieval church was heavily influenced by Greek philosophy, and they had this whole dualistic system, right? You had the matter was corrupt and evil, and the spirit was what was good, and that led the medieval theologians and to come to the point where all non-clerical work, non-clerical in the sense of the church, non-explicitly Christian work, was demeaning and diminished, and the only people who were actually called, their work was called a vocation, which the Latin meaning to call. The only people's jobs who had their work called a vocation were Christian monks and priests, and whatever that was.
People whose work was spiritual.
That was spiritual. Yeah. And it was really, ironically, today is November 1st, it was the Reformation. Really that brought an end to that. That restored the dignity in all work. Yeah. And I'd like to read something here. It's interesting what the Reformation does. It says, the Reformers contrasted the monastic call from the world, with the biblical call into the world. As Jesus says to the Father in 17:15, I do not ask that you take them out of the world, but you keep them from the evil one, while still within the world. Calvin articulated the view of ordinary work so distinctive that it later became called the Protestant work ethic. He taught that individual believer has a vocation to serve God in the world in every sphere of human existence, lending a new dignity and meaning to ordinary work. And so it really was the Reformation that restored dignity to being a mortgage broker, to being a bus driver, to doing what every sphere of human activity is under the hand of God and under that creative imitation of God, where we're to go out and fulfill this cultural mandate. And that's what's missing. A lot of people view their jobs, if they think of it at all in Christian terms, is either just something I do to provide money for my Christian activities, to support real Christian work. And so people a lot of people think of their jobs in that way, that it's just, it has no inherent value in it itself. And we really need to think of our jobs in terms of, no, we're co-creating
They're
with
eternal.
God.
It's eternal work.
Yeah.
It has an eternal significance. Even, bus driving, mortgage, it has not just Christian ministry,
Right.
it has eternal significance. Yeah, and I think on the other side of that, or maybe just more specifically, God created matter. He loves it, and and there's kind of, and this may be not this may be a stretch of the meaning Jesus had in mind, but he said he came so that we can have life and have it abundantly.
Mm-hmm.
And I think that includes now on this earth enjoying. We've been given matter to enjoy it, and I don't have the verse pulled up, but Ecclesiastes talks about enjoying the labor so that we can enjoy the riches and the fruit that comes from it. And,
Right.
And that is a good thing. Enjoying a good meal and enjoying a good sports game that you maybe had to pay good money for to get good seats to, and those are all good things. So the work itself is good, and then the money that comes from it that enables you to enjoy it is good. And of course, that's not to undermine the value of then generosity with that money and selflessness and sacrifice. Sure. But it's important, we always face pendulum swings, and it's important right now in a time where not just this year right now, but just a time in our culture where the Christian response to materialism is that dualism that you're talking about, and we need that emphasis on the good of matter and the things of earth. So let's get a little bit practical with that. I think on two questions come to mind that I want to consider on a practical level. One is just on a daily basis of how you factor in that motivation of money, and one is, let's take a scenario where you are choosing a job. You mentioned it a little bit. Let's start with that scenario. Say you are choosing a job. Someone's got an opportunity coming up, or they're in a job that is really meaningful. You have day-to-day interaction with people that you're able to disciple and you're able to have an impact on and encourage, but you don't have as much money, or you're just not as driven for it, or something along those lines, and you have an opportunity to take something a little more lucrative and something that maybe is easier in a sense. There's no right or wrong there, but what are the things to consider in that scenario?
Well, that's a great question. It is hard to be very objective with those types of decisions. Yeah, other than because you've laid the conditions, you set the conditions that says the existing job is sufficient, right? The existing job has, you're making enough money.
It's okay.
You're not. Yeah. You're providing for your family.
Mm-hmm.
And you're contributing, and it's not an evil work. It's a faithful work. It's a lawful work. It's a good work.
Probably something that some people would see. The comparison I'm trying to get at is something like that people would see as more spiritual, more of that giving back nature, versus something that is less seen that way and more lucrative.
But more yeah. No, that is a tough one, and I think goes back to our earlier conversation about the difference between those two different factors. I do think, all other things being equal, that if you have two jobs that are equal on the monetary scale, but one is, if you had a way of measuring that, mm-hmm. much more meaningful on in terms of fulfilling the cultural mandate,
sure.
Then sure, you take that one. But how you compare two different jobs, I think it's very hard. I think money is a fine, it is in a fully acceptable condition or criterion that you use in order to evaluate whether to take the new job or not. Now, of course, you have to think about other things. I remember when I moved out of being an employee to self-employment. And that was a big decision. And it involved risk.
Mm-hmm.
Right? It involved risk. I had 3 kids at the time. You weren't around yet. Cole wasn't around yet. We had 3. We had 3 kids at the time, and my highest and yet best, safest use was as a CPA. But I didn't love it, and I'd spent 11 years trying to love it. And I could never get to the point, and because I didn't love it, I never felt I could be great at it. I always felt like I would always be fighting that this was drudgery to me, and therefore I wasn't really going to go the extra mile and be very great at it. And at some level, no matter sort of the inherent differences between being a CPA and being a mortgage broker, I was never going to be as good as CPA. Now at the time, I didn't know I was going to become a mortgage broker. I went into an accounting aspect of a mortgage company, and that led to that self-employment decision. But it was one of those things where spiritually, it was kind of depressing. To be, I won't say I was depressed, but it was. Yeah. I didn't enjoy the work, and it was drudgery.
Yeah.
And the idea of going into work, and so the opportunity to move into something different was exciting. And then when I went from there, I went to become involved in the finance as a salaried employee, the finance division of a bank, working with a mortgage company, then into self-employment, becoming an independent mortgage broker. There was a great risk involved in that. But that really fired me up. There was a lot of excitement and interest and enthusiasm. And so I do think there's an element of that involved in making that decision. There's risk involved, and you need to know, you need to take that into account. It doesn't mean you're always going to make the right decisions. It doesn't mean if you take a risk and fail and suffer as a result of it, that it was the wrong decision. But it is something that you need to evaluate the risk and evaluate your responsibilities and know that, okay, I have 3 kids, I have a wife and 3 kids to take care of, and am I taking a really foolish risk, or am I taking a risk that's necessary in order to move into that? So I do think there's always going to be a very subjective element there, but I think absolutely the idea that, hey, but this could result in significantly increased income, and that's exciting to me for my family, and I think I would want to go for it. I think that's a fine motivation to factor into that decision making.
Yeah, do what you want to do, and money is not a bad motivator in that. Like, again, there's no right answer, but do the thing that's good that you want to do, and know that money is pursuing increased money is not a bad thing.
Right.
Great. Well, let's briefly touch on kind of the other question, which was on a day-to-day basis. How do you think about that? Do you, if it is a good thing, do you set monetary goals? Obviously there's some work where you're just paid a salary, and what you do isn't going to affect that directly. But maybe you have a side hustle that you want to pursue, and you set monetary goals there, or maybe that you could get an increased pay if you have these certain actions. So what's a good way to take what we've been talking about, say, okay, I've been kind of toying with that idea of I want to get more money out of my job, or consider a job with more money, or and now I feel a little bit more comfortable pursuing that and being mindful. What's a good way to then to let that factor in and pursue that? Do you set monetary goals specifically, or have you found any helpful ways to think about it on a day-to-day basis?
I think that setting goals, the most successful people in just about any endeavor, any industry, most businesses, especially in leadership roles, are characterized by habitually setting goals. I'm not one of those. I'm terrible at that. And that's just frank admission. Is that I just tend to pursue, every day and try. I do try and get better. I like getting better, and I look for other people who are doing it better than me and try and grow. But I don't set specific goals. But to answer your question directly, so I don't want to be a hypocrite and answer the question in the way that I believe is true. I believe setting goals is super important, super helpful. because when you set goals, it forces you then to, then you take those goals, then you break it down into, okay, what are the activities that are required to achieve those goals? And then what are the sub-activities that I have to do? And then what are the interim steps that I need to take in order to achieve the first part of that goal? It's not hard to see why that's a valuable part, of successful business people's lives. It's because it forces you to break down and then to stratify. It's kind of like, here, these aren't ours, but the idea of hustle, grind, and execute. When you have specific things laid out before